Started. We've got some interesting news today. Talk about Monday. One piece of news that we had last week that I was looking at was the banks starting to potentially be pushed, and I think this is kind of a theme that you start to see, is that the new administration is possibly putting pressure on banks and institutions. I just want to talk about, we saw that JP Morgan and other banks were being encouraged to lend to people with lower credit rating, maybe to give more access to credit. This reminds me of a great book. This book called Hidden in Plain Sight by Peter Wallinson. This book describes about the 2008 financial crisis and how the U.S. government caused a huge part of that crisis, not because of low interest rates, but because they were pushing the Fannie Mae and Freddie Mac to have lower and lower quality loans, being a higher and higher proportion of their overall mortgage loans. And the result of that was eventually, since Fannie Mae and Freddie Mac do not issue loans, they had to get the banks to issue those loans. And the banks were the manufacturer that sold all of these loans onto Fannie Mae and Freddie Mac. And so ultimately, government regulation had a lot to do with it. And recently, we're seeing pressure coming on to the banks to be able to provide access to people with lower income. Now, there's nothing wrong with providing credit to people with lower income. It's just that there's been tried and true measures for measuring the creditability of people and companies in repaying debts. And we know that as you start to go down the scale in those measures, what you find is that repayments become less reliable. So there is a cost with making funds available to everyone. In addition, there's another cost. So to take an example of the mortgage market, if the US government through the housing authorities basically are pushing Fannie Mae and Freddie Mac to have more and more lower quality loans, basically what's happening is they're providing funding money to people that were not in the housing market, but now because of the lending standards went down, they're now in the market. And when you bring 1 million more people in the market, you're increasing demand, and that's driving up price. And that's part of the reason why there was an increase in housing prices during the 2008 crash. Basically, we saw after it. Great book, Hidden in Plain Sight, Peter J. Wallinson. So I just wanted to mention that before we got started. Make sure to put your questions in the chat. And also maybe someone who's on here can go out and look for that book, Hidden in Plain Sight, on Amazon by Peter Wallinson, and then put a link into the notes there. And then let's take a look at it so other people can go through. All right, first news of the day from the Wall Street Journal. Natural gas, America's #1 power source, already has a new challenger, batteries. Huh? What? Well, Vistra is shifting from natural gas to solar energy. Vistra Corp is one of the largest natural gas producers in the U.S. It does not plan to purchase or construct new natural gas plants. Instead, it plans to invest more than $1 billion into solar farms and battery storage system. As clean energy becomes the norm, consider investing maybe in these types of energy storage companies. Wind and solar farms have gained substantial market share in recent years, aided by the government's push towards renewable energy. Investors could benefit maybe from investing in energy storage companies like Nextra Energy or Sonnen. Now, I do want to mention that we're seeing a lot more news now under the Biden administration and, around the world about climate change and all the things that are being pushed there. One of the things that's being pushed is renewable energy. Now, it's really a question, in my opinion, of, if market forces were at play only, most renewable energy sources would be priced out of the market. One of the reasons why renewable energy is in the market is because they're receiving subsidies from the government. Now, of course, the oil and energy companies also receive subsidies. Really, we should stop subsidizing the oil companies, all the subsidy that they get, and maybe some subsidy towards the renewables. But even with those subsidies, you see that renewables are still expensive. So one of the reasons why it's quite possible that we don't have the shift to renewables that everybody wants is that everybody wants a shift to more renewables, except that they're not willing to pay. Just look at an example. Take the face masks that we've had during this crisis. Does anybody give a shit that those face masks are now all over the world and all in the oceans and all polluting everywhere? Nobody cares about that. Why do they care about that right now? It's life or death, right? When it comes down to your own decision, there's a lot of people that would just say, I'm going to go with the cheapest option, or maybe that's all I can afford. So I have a question about renewable where I think it's probably likely it won't come rolling out just as fast as people think. In addition, you've got, right now, you've got America now dependent on imports of energy, which is very odd because we were just in a position where we were a major exporter of energy. All right, next one comes from CBS News. Of course, remember that all the major news outlets from the U.S. are severely biased towards not only the U.S. side, but you could say maybe the U.S. liberal side. And here they're talking about Israeli airstrikes kill 42 and topple buildings in Gaza City. So there's an airstrike that killed 42 people. Israel claims that the airstrikes targeted Gaza's underground military system. And this is the largest attack on Gaza as tensions continue to escalate. Geopolitical instability could lead to continued rise in commodity prices. Tensions could escalate as U.S. backs Israel and Arab nations, of course, back Gaza and back Palestine. If this starts to trigger confrontation between superpowers, price of oil, price of gold may continue to rise. In fact, I've shown previously that the major increases in inflation and particularly oil price come during times of war. Now, hopefully, what we can see is that these countries will come to some kind of reconciliation, and the major powers hopefully will come in and try to calm things down between the U.S. and Russia. But I have to say, I'm not that hopeful, and I fear that the U.S. is willing to destabilize the Middle East right now. All right, next, brain gain. New boutiques, deals surge, lure expat bankers to Australia, mate. So for the first time since World War II, more Australians are returning home than leaving. And boutique advisory firms are luring Australian expats, investment bankers, back home. There's a company called Jarden Australia, recruited almost 100 staff since its launch a year ago. And they call that brain gain, not brain drain. And it's really partially due to the fact that the cases are pretty low for COVID. That's one factor. So it may promote overall economic growth. As a majority of these expatriates are mid-career to senior bankers, this could lead to increasing household demand or other consumer discretionary demand. Look for companies like Harvey Norman, Kohl's Group, and West Farmer. In fact, for those students in the Valuation Masterclass, you get to know Harvey Norman very, very well because we look at that company in Australia. Next, AT&T nears deal to create $150 billion streaming giant with Discovery. Interesting. This is fascinating. AT&T's subsidiary Warner Brothers is finalizing a merger deal with rival Discovery to create a media giant valued at $150 billion. The combined telecommunications and media assets operations would help optimize AT&T's media operations. In addition, the deal could help AT&T compete with other global streaming services such as Netflix. Negotiations are still ongoing and the structure could change. I think that this is an interesting one, and the reason why I find it fascinating is because some of the biggest telecommunication type of deals and let's say media type of deals that were done were previously done at the height of the last bubbles in 1999 and also in 2007 and around there. I see these guys as very unsophisticated players in some ways. They overpay at the peak of the market. Look at it right now. Look at Netflix. Netflix is so high and it's such a peak for Netflix. While everybody's going back to work, here they are spending a huge amount. This Warner Brothers group under AT&T is spending a huge amount of money to enter late in the game. I think they'll probably end up overpaying. Now, it also reminds me of some research I did a long time ago looking at mergers and acquisitions. And what I found was interesting. I looked at 5,000 companies that had done M&A deals. And I was trying to understand, first of all, the share price performance for the acquirer or the target company. And what I found is that from the date that the announcement came out, you would have a slight advantage if you were buying the target company, but not by much. Of course, much of the insider, much of the M&A that people rave about that they made a lot of money on. It was either that they were lucky to own it before the deal happened and they owned the target, or they traded on inside information, which of course we all know is illegal. The other thing that I noticed, and this was kind of even more significant to me, is I measured the return on invested capital of the parent company, the acquirer company, and I looked at their return on invested capital 3 and 5 years out. And what I found was 78% of the time, return on invested capital was lower. In other words, the synergy they said that they were going to get through the M&A deal did not come through. That is fascinating, and it helped me to understand, be careful about buying into M&A deals. If you're going to buy into an M&A deal, obviously if you're not engaged in insider trading, but you're in it before the deal happens, that's going to be your best performance, and you want to be in the target company. But for the parent company, if a company announced that they have an M&A deal, I'd sell it. All right, let's look at the next one. The Washington Post, China lands rover on Mars in milestone achievement. So the Mars mission is a great leap and shows huge investments in China's space program. Only China and the US have successfully landed and operated rovers on Mars. US has had 9 successful Mars landings, while China became the second nation to achieve the mission. The common purposes for the country's missions is to survey the signs of water, in other words, try to figure out if we could live there, and to find resources that we could use on Earth. Now, while the Sino-Russian cooperation creates tension, commercial opportunities arise for investors. Currently, China is planning to partner with Russia to build its own lunar base, and this could increase political tensions between China, Russia, and the US. As NASA's space programs become more privatized, investors could look to space exploration startups. And we've already seen Elon Musk's startup and Jeff Bezos' startup. Now, when I did my PhD at the University of Science and Technology of China. That's oftentimes called the MIT of China. There was tremendous amount of people there who were very bright. In fact, they had a young and gifted program where I met many young Chinese men and women, or girls and boys basically, that were like 12 to 16 who were there. You know, and one thing I have to say that I admire about China was that they're not going to let their smartest people go without an education. They're going to get them into the best schools. And that university had a lot of different space type of programs going on that were either on location there or at other locations. Of course, I didn't get access to them, but I could just walk around and see what was going on. And there were just a lot of really smart people. So I don't doubt that China will continue to progress in this area. Now, the central bank jumps into climate change policy fray. What's this story all about? Well, the network for greening the financial system currently includes central banks from 90 companies, including the US. They propose raising interest rates on carbon-intensive collateral assets in March. They plan to raise capital charges on fossil fuel companies during a conference that will take place next month. And the Fed claims that imposing climate policies will help prevent cost-push inflation resulting from climate damages like crop shortage. Raised interest rates may hurt fossil fuel companies, so investors could consider renewables. This story is a freaking disaster. To think that the federal government can come in and dictate, oh, let's raise rates on these guys, let's raise taxes on that, and that they can manipulate the markets in such a way without understanding all the unintended consequences of it, it's a joke. Anybody who knows what federal government does, particularly in the US, knows that it's just full of waste, full of waste. Now, I've already talked about the fact that they're trying to subsidize the renewable companies, renewable energy. And here now, what I've said is that renewables still are very expensive compared to traditional fossil fuels. And what they're trying to do is give subsidy to renewables. I mentioned the story earlier that will reduce the cost of renewables to the average person. But here, what you can see is they're trying now to penalize the oil companies and say something like it's going to, benefit the cost push inflation. That's ridiculous. If this goes forward, it's going to push up the price of oil, and that is going to be pushed on the consumer. Now, maybe that equalizes the two of oil and renewables, but in the end, I think that market mechanisms like this and the government thinking that the Fed, what the heck does the Fed have to do with climate change? if the government wants to do a policy, they should do a policy. But putting the Fed in charge of that, ridiculous. This is ridiculous news from my perspective. All right, next. Axis Asian operations are hit in ransomware attack. This is coming from the Financial Times. So, Avdon, a cyber criminal group, seized sensitive data from Axis Asian branches. That's Thailand, where I am, Philippines, Malaysia, and Hong Kong. There was a U.S. pipeline attack, of course, last week, resulted in a $5 million ransom payment, which could have incentivized more of this type of blackmail that's going on, or ransomware. And recent cyber attacks could be huge drivers for rising prices of cyber insurance. And prices have already rose about 35% this quarter, and it's up 17% in fourth quarter of last year. So not only are we going to see COVID insurance rise, which has already happened, now we got cyber insurance. Now, there are some ways to play this NASDAQ Cybersecurity ETF, CIBR, or CAC International Okta Palo Alto Networks. Of course, these aren't recommendations, but they're ideas of possible opportunities to play this theme. Next, Burger King to open first delivery-only kitchens in the UK. So, Burger King opened its first delivery-only location in London as online orders surged due to COVID-19 shutdowns, while another organization called Brinkers International, which is an American firm that owns Chili's Grill and Bar and many others, delivery-only restaurant, is projected to generate about $150 million in 2021. There's also Five Guys, Chipotle, and Wendy's are also expanding into delivery-only kitchen. So F&B giants have the resources to transition to delivery-only service. Food delivery service market could reach almost $200 billion by 2025. And investors could capitalize on F&B giants by investing in things like cloud computing, packaging, right, for food delivery services. Now, of course, the big food giants get to capitalize on this. So many mom and pop shops are already out of business because of COVID shutdown. Let's get into some of the questions here. The first question comes from Ravi Chailat Burisut. All right, could having more access to credit also lead to a similar outcome to the 2008 crisis? Absolutely. If you pump people full of credit, eventually it pops. Now, let's just look at my niece. She just borrowed money to buy a house in Michigan, and she borrowed money at about 3% interest rate, and it's fixed. So it's not going to hurt her. If interest rates go rushing up, a huge increase in interest rate, who owns that loan? Does the bank that gave it to her? No, the bank that gave it to her doesn't own it. That loan is transferred on to Fannie Mae and Freddie Mac, quasi-government entities, which end up being government entities when everything goes wrong. And basically, those are the places that are going to be holding it. No problem. They can finance themselves with long-term debt at U.S. government rates. But the fact is that it starts to build up pressure. We did see Fannie Mae and Freddie Mac having tremendous losses in the 2008 crisis. So again, what I would say is consumer credit's different. Fannie Mae and Freddie Mac are getting mortgage credits, but here we have a risk. All right, but the other question is, how could you turn down 3-4% interest rate for a home right now? It's so cheap. So Rahul says, buy, sell, or hold growth stocks during these market conditions. I'm a little bit nervous about growth stocks at this point. I guess I'm kind of conservative. I've been generally overweight commodities, and I've been underweight the U.S., and the U.S. is really a lot of growth. That's hurt me in the U.S., but I also feel like if something happens in this world, I feel like the U.S. is most vulnerable. So I would say dividend stocks, value stocks are more defensive and could be a place to play. All right, Chris says, how long do you think it's going to take to replace fossil fuels with renewable energy? Probably never, because fossil fuels are so cheap and abundant that it's very hard to get renewables. I would say it's more likely that we get a breakthrough in how we handle the pollution that's coming from fossil fuels. All right, next question. Titikon says, do you think gold will make new record highs this time under these new circumstances? Maybe war, maybe inflation, ongoing corona, or crypto market will be a challenge to that? I think that gold will have another run, particularly when we start to see the weakness in the US dollar. So I would say maybe a combination of gold and crypto. just because gold is running doesn't mean that crypto should be falling. They could both go up at roughly the same time. So yes, I see that. But right now the market has been a bit subdued. So I'm looking for some upward momentum in gold before I go and allocate more to it. All right, Jenny, which industries are you longing for in Thai equities? I guess the industry that I'm always nervous about in this types of crisis is the banking industry. So I wouldn't say I would be long there. I would be very careful in the banking industry. We've already seen strength in consumer type of companies. So maybe we can see consumer discretionary type of industries come back. But generally, those some of the ones that I guess I would look at. All right, Munling says, do you think Israel and Palestine will be able to come to an agreement, compromise? No, I don't think so. Unfortunately, it's been a long time they've been trying to do that. But I do think that, and I don't think that Biden is capable of leading that. We did see Trump trying to lead some of the peace initiatives, as well as his son-in-law, I believe, at that time. So I don't think so. I think that what probably will happen is that Russia is probably going to step in, or Russia and China, and try to counterbalance the U.S., and then show that, hey, we've got to get these guys to compromise. Unfortunately, I don't see resolution. Sut Chai says, though there's a trend in renewables, do you think the oil superpowers will really allow that to happen? Yeah, I think it's very, oil is tied up with big government, and it's not easy to see that oil is letting go. Now, of course, the oil companies are setting up renewable, trying to make sure that they're covered as things change. But yeah, it's not going to be easy to see that transition. Okay, come on, Paul says, could Thailand's success in brain gain policy as other countries? Well, look at you. You got great brains, and you are here now. You didn't come back from somewhere. But I do think that what we're seeing, I'm going to fix my camera. There you go. What we are seeing is that a lot of young Thai people aren't traveling abroad to go to university. So maybe they'll stay in Thailand and study from their homes for the university. So space race 2.0 to Mars. Yeah, possible. Okay, next comes from Rahul again. Why would you sell the M&A target company? Doesn't it make the parent company more robust accumulation of assets and manpower? I like this question, Rahul. So basically what it is, the answer to your question is that management is usually full of crap. They're talking their own story. They're excited about their story. They're going to sell you this amazing story of buying this target company and all the synergies that they're going to get. But look, the reality is it is super hard to buy a company and then get them to work together and get the synergies. It almost never happens. So when companies start pumping up M&A, you usually see a situation where the parent company's share price is going up because people are excited. But in reality, you're never going to get a great return. So now what you're talking about is the accumulation of assets and manpower. But what's the point of adding assets and manpower if you can't get more and more and more out of that? Now, there is one part of that study on 5,000 companies that I didn't do that I would like to do more of, and that is to look at, if you look at 5,000 M&A deals that happened over a long period of time, you could classify certain acquirers as experienced. In other words, they've done more than 3 acquisitions in the last 5 years or something like that. I suspect that you'll see that serial acquirers may do better than just the average or random acquisition. A company in Thailand is called IVL, and they have done consistently well in their acquisitions, buying assets for less than their fair market value. So I think there's more to be discovered here. Okay, Titigon says, since the world trend is moving into clean energy, is it wise to invest in battery company and technology now, or should we wait? Well, I think that, nothing wrong with investing in that. You just need now to look at whether that sector or the particular company that you're looking at is too expensive. And that expensiveness has to do with their PE, their price to book, and then understanding their return on invested capital as well as their revenue growth. If you can just understand those things for the next 5 years or so, you may be able to say, hey, it may be a little bit expensive on a PE basis, but it has the growth. All right, let's continue. The next one. What industries do you think will be affected by Chinese space exploration? That's a good question. I don't have a good answer because I think that space exploration, you could say that it could be satellites and that type of thing, but these types of things are either not listed companies, or there may be some listed companies in the Chinese market that I don't know about. So not sure. It could benefit the other NASA-related companies as well as SpaceX and the others also. What's the difference between cyber insurance and security companies? Do they do both? Well, cyber insurance is just an insurance company that says, if you get hacked, we will pay you a certain amount to cover the cost of that. Whereas a security company is trying to stop you from getting hacked. All right, next, Ravi, could you say that small business could be wiped out, emanate out in the coming decade due to competing with large F&B and extraordinarily high delivery prices? Well, I think that it's already happened, right? Small businesses have been wiped out by the crisis everywhere, and the large businesses are taking over. So they're going to get an advantage in this space. Now, you could argue that with these distribution networks like Grab and Uber Eats and these types of things, even a small company can access. You know, in the old days, only big companies could have a fleet of motorcycle delivery guys, but now anybody can. So you could say that some conditions are more favorable for small companies right now, but so many have been wiped out. Just walk down your street and you can see it. Next, EU has recently passed taxonomy regulations, which will make large and publicly traded companies report about their environment impact and how they contribute to achieving environmental goals. Do you think such reporting obligations will change the not sure what the rest of that is. Let's see. Well, personally, I think that there's a lot of games going on. Anytime the government asks for companies to report their usage of gas, emissions, and they're reporting different things, what you find out is that there's a lot of gaming of the system. In fact, many of the reportings like ESG now, I question whether they're just greenwashing or trying to show themselves as doing good things when in fact nothing much has changed. So I would say that I wouldn't expect big changes from it. And normally the other problem with this one is it brings on a lot of additional costs. The more regulations you put on business, the more costs that they have to expend to try to meet those regulations. And the end result of that is that raises prices for consumers. All right, next. Rahul, you got a lot of questions. Love it. How do you figure out which M&A deal is good for the acquirer? How do you evaluate whether the different management will integrate or not? Or just be skeptical? I think you've got it right by just being skeptical. I worked for a Thai broker in Thailand, and we had a Malaysian bank take over that broker. And I can say that at first it seemed like everything was going to be pretty great by allowing the Thai entity to operate as it was. But I could see very quickly and over time that changed. And the acquirer, I mean, you bought it. You have the right to do whatever you want with it. But sometimes with that heavy-handed outlook of what happens, you can end up destroying that business. That business was the #1 broker in Thailand for almost 13 years consecutively, and now it is a shell of itself. And I would argue that some of that had to do with the acquiring company's behavior relative to it. So I would be very skeptical about it. The only other thing I would say, Rahul, is if they can buy it at less than fair market value, if you could buy a company at less than fair market value, that would be a possible good sign. Next one, do insurance companies always benefit when more insurance is bought? They're never going to lose or go to bankrupt. Well, first of all, the insurance companies are regulated in every country, and they're regulated very tightly. So, like, for instance, insurance companies can't own more than maybe 5% of their portfolio in stocks, depending on the country. But I know in Thailand, it's a tiny amount. But that tiny amount basically means that they're not going to be hit by problems related to stocks. The other thing that you can say is that sometimes we have a catastrophe where every insurance company is hit. That's why insurance companies do reinsurance. They may take an insurance policy that they created in Thailand and they may sell it to a Swiss reinsurance company that now distributes the risk across the world. And that's one of the ways that insurance companies try to deal with it. Wow, lots of great questions. And Rahul Joshi, I want to say thank you also for your excellent questions. I think that's all the time we got for today. We covered a lot of things, but I really appreciate all the questions, and have another beautiful